Let's get across the market open now. Jessica Amir joining us from Mood. Jess, welcome to Tuesday. Good to see you again. What are we seeing out of the States? Obviously, still focus on Donald Trump and his tariffs. There are concessions, but there's also confusion.
So much confusion, not enough time. But it does seem, Andrew, I guess the good news dial, if you can call it that, is tilting to the upper right. And that's why we're seeing stocks, I guess, think that we could maybe be up and away. We're starting to see stocks continue to move up off their lows. So we think about the NASDAQ 100, it's now up 14% from its April 7 low. The Aussie market not up by a similar magnitude, but it's following up. It's up 5.5%. And the reason for that, as you were kind of alluding to, is the drama and the fear. So the fact that we've seen the volatility index, the market's fear gauge, fall from those peaks that we saw, hysteria highs of 60, down to a level of 50, is encouraging. And that's why we're seeing investors buy back into the equity market. Also, pleasingly, Andrew, yes, we still do have that uncertainty. One day tariffs are on. One day we could potentially get a pause for some niche sectors, but we are still seeing, I guess, the carry trade concerns are kind of like coming back. When I say carry trade concerns, I'm not obviously talking about a carry trade concern, but this similar sell-off that we saw in the carry trade in 2024 is kind of being replayed with the fact that we saw the VIX peaking at 60, and then it's come down to a level of 30, and now I guess markets are comfortable to buy the dip because we're seeing bond yields fall, the US dollar fall. So we're kind of bouncing off similar lows that we saw in the Japanese carry trade. So the question is that, do you buy the dip? That's something for you to consider and take a very long-term view, focusing on quality.
So it's such a difficult call, isn't it, Jess? Because we still don't know
Yeah.
what's coming as far as Donald Trump's agenda. In fact, he's just spoken about extending his tariffs to pharmaceuticals. We did know that was likely. Not much further detail, but potentially that could hit Australia as well.
Yeah, unfortunately, that means CSL, our darling. Of course, they make a large chunk of their revenue from the US. Indeed, we saw what happened in COVID-19 with immunoglobulin sales as well being decimated. But we do have to remember a little while ago, we saw CSL came out and pledged that their revenue growth could continue. Now, if we do see CSL hit with tariffs, or that being said, other pharmaceutical companies, then that means that their margins could see some compression, and you might see CSL shares fall. But whether that remains to be seen, we're not really sure. So if you are looking at pharmaceutical companies, you do like CSL, maybe you do have an opportunity to buy the dip and take a long-term view if that's something that you're interested in. I'd particularly be focused on CSL ahead of peak winter season. We do know that CSL tends to behave quite seasonally. And what I mean by that is CSL traditionally rallies up before US winter and then pairs back. So maybe you could couple this potential sell-off that may be looming on the back of Trump's announcement overnight, and then take what we're saying in the historical patterns, and maybe you could factor that into your buying if you do want to take the buy the dip scenario for long term.
So, of course, just we have heard from Donald Trump that he's got that pause on electronics, particularly smartphones, other computer-related products as well. Potentially looking at a reprieve too for car makers. Where would you be looking for that opportunity? I guess particularly given the raw materials involved, potentially those commodities.
I think I don't know if that was a trick question, but I think your answer lies in your question. So commodities. So we do know we do have a pretty solid setup for commodities now. In fact, commodities have been the biggest benefactor of the trade war. I mean, the fact that gold is up 24%, punching the lights out, while equity markets and most commodities are underwater, beside the safe haven commodities, vis-a-vis gold. Gold and silver continuing to set new record, all-time high after all-time high. Silver is a key commodity that's needed in electronics and, of course, in electric vehicles. So that would be one to watch. We are seeing a bit of consolidation, perhaps, in the silver price. So maybe that would be, for some, an opportunity to consider buying the dip, if that is your belief that we could see some reprieve from Donald Trump, because he wants to allow US car manufacturers time to set up shop in the US. So that means we could see over the next couple of days or maybe weeks, will that be some type of exemption of tariffs on cars. So absolutely, silver would be a key benefactor. Copper also really looking interesting quite here. Other key commodities needed in electronics as well, also looking really interesting as well. Not really sure about lithium. That seems to have died a hard death, but really interesting to see that other commodities are doing quite well this morning, including aluminium as well as nickel.